everybody, this is Lisa Harper, and you're listening to the Not Ready Yet, Curating Conversations for the Aging Journey podcast. This is the show that changes the conversations we have with our loved ones about aging and life decisions. Let's have more honest conversations where we speak the quiet parts out loud. Today's guest brings more than 3 decades of experience helping individuals and families make thoughtful, informed decisions about their financial futures. Carly Ebenstein is an independent broker and certified and long-term care professional who has spent her career collaborating closely with financial advisors, estate planning attorneys, and CPAs to create well-rounded solutions for her clients. With a strong foundation in the securities industry, including previously holding a Series 7 license and advanced coursework through UC Berkeley Extension's Personal Financial Program, Carly combines technical knowledge with a deeply educational approach. She's known for empowering clients with clarity and confidence, not pressure, and for helping them understand how long-term care can impact even the most carefully crafted financial plans. Her perspective is practical, collaborative, and rooted in real-world experience, making her a trusted guide for families who are navigating some of life's most important planning decisions. Thank you so much, Carly, for being here today. I know this conversation is going to have such value for the listeners.
Well, thank you, Lisa. I really appreciate you having me and having this conversation.
How did long-term care insurance become your realm of expertise?
Well, thanks for that question. I guess, nobody goes to college and thinks, I'm going to sell insurance or I'm going to sell long-term care. I would say that I was already, so I had been Series 7 registered and working as a stockbroker, and I left to study financial planning, and along the way, I got involved in health insurance because I had to figure out how to get my husband and myself health insurance. And the crazy thing was that I realized I was licensed to sell something and I didn't understand it. And that made me think, how many people need help and really don't understand how their health insurance works? Well, I was in that business for quite a while. I'm not in it anymore. And now my focus is long-term care insurance because this is so typical. I had a family situation. Mm-hmm. My grandmother had dementia, and my family was not prepared at all to deal with it. And my grandmother was not wanting to make any decisions even before her symptoms became more noticeable. And, luckily, she actually had money. And we paid. I mean, my mom had power of attorney, and it was, paid for out of my grandmother's funds. But it made me think, since I already had an awareness of long-term care insurance, it made me think I need to find out more about this because there clearly was another way to do this. And by the time my grandmother died, I mean, there wasn't that much money left.
Yeah, and so you make a great point, which I think is one of the high-level misunderstandings or just people not understanding how it works. And so long-term care is either private pay or the insurance policy. I mean, is there really anything else? Because I know people think Medicare, but that's not necessarily true. Can you help us understand how they're different? What is that clarity we need there?
So that clarity is something I have that conversation every week about because it always starts with, okay, but what about Medicare? And I tell people, Medicare does not cover long-term care expenses. Medicare is for medical things. Part A is for hospitalization, and Part B is for outpatient and lab work and things like that. But if you've had a heart attack, or you have Parkinson's, or you had I had a client who broke their pelvis, and then you go home, they send you home after a period of time. But this is where long-term care comes in. Long-term care coverage pays benefits when people have problems with the activities of daily living. Mm-hmm. That is a very common term that defines whether long-term care benefits will be paid. Now, what are those activities of daily living that Medicare does not pay for? The way I always used to forget one, and now I remember it because I think these are the 6 things that happen within an hour of waking up. You get out of bed or chair, so that's called transferring, getting out of a bed or chair. You walk over to the bathroom. Walking is an activity of daily living. Showering or bathing, brushing your teeth, all of those things, that's an activity of daily living, kind of grooming. Continence, that's another activity of daily living. Getting dressed, and then eating. Not preparing food, but actually eating. Like bringing the fork to your mouth and swallowing. If somebody has problems with 2 of those activities of daily living, doing them safely. Not that they can't do it, because maybe someone is lucky and didn't fall in the shower or bath or something, but can they do it safely? Then benefits will be paid. Now, there's one other thing I need to mention, because sometimes people are they can do all those activities of daily living. There's no issue. But cognitively, they're slipping to the point where it's not safe for them to spend too much time by themselves. Maybe they'll wander. Maybe they'll let a stranger in the house. Maybe they'll be more susceptible to scams. Maybe they can't balance their checkbook anymore. I have a client now who actually purchased long-term care for his mother, and he told me that this was after he purchased it, a couple years later. She had a lot of anxiety about money, to the point where she was Korean, even though she spoke English. She kept calling him every 10 minutes because she was worried about money. And he said, Carly, I don't understand. I actually had something written up in Korean, and I put it like all over her house, but she's still stressed out. And I just said, she needs help. Like, this is not, you can't rationalize with this. It's not reason. It's something that her memory, her brain cannot retain that information now. And so in that case, that benefit is being paid now, even though physically she's healthy.
And that was one of my questions, was the ADLs, but it's also if there's a cognitive impairment. So that is a qualifier too for long-term care.
Absolutely, absolutely. And I kind of need to go back because I realized I got
Yeah.
sidetracked with the activities of daily living. So clarity is that Medicare pays for medical things. People can private pay and use their own money and pay for it. If they exhaust their funds and now they're practically destitute, then they'll go on Medicaid.
Okay.
And a lot of people confuse Medicaid and Medicare, but Medicaid is basically like you have to spend down your assets. And if you have a house that somebody's still living there, then what happens is after that person who was on claim through Medicaid dies, the government comes after the house because it's too expensive. We, as a country, despite our wealth, we can't afford to be paying for people to be in a facility or having care for 3, 4, 5+ years. Well, in general, they actually do an audit, and so before they have to actually go after that other money besides the house, you have to spend it down. They force you to spend it down, and they actually look back 5 years. So because they know about the tricks of like, oh, giving them to a child or this or that. Now there are ways to get around it but it takes planning. Like if you get an irrevocable trust, like there are ways, but if you don't plan, you don't have that many options.
I think you were just saying, like how long is your time on needing this care? We don't know, right? There's so many things that are big question marks. We just don't know. We don't know when, but we know we're going to pass at some point. And so, when you look at the numbers now of life expectancy, the overall average between men and women is 79, women 81, men 76. And then the next number, I think, is 70% of people over 65 will need long-term care during their lifetime. And
Yes.
so how do we know when to start like thinking about this and It's so overwhelming because most people, that's why we're having this conversation. The not ready yet of life is people don't want to acknowledge that they're aging. And our country does a really good job of trying to, like, pushing anti aging more than talking about aging. And so I'm here raising my hand saying, I think we need to talk about aging, guys. I think we need to. So at what point, like, what's the best time to start applying, or what are those parameters?
Sure. So, the sweet spot is generally considered to be between age like 50 and 65. That's kind of, I'm using air quotes, sweet spot. However, I've had clients get long-term care insurance. I've had two women, age 78, they do not know each other. It was just a chance. They both contacted me and they were able to qualify medically and they had the money. And so that was great. I've had clients in their 40s get long-term care insurance because they are thinking ahead, and usually they've been affected in some way. Like they either have a direct family member or they're hearing about this from extended family or friend. About a month ago, I was actually contacted by someone in their 30s. So
Wow, really
I'm so glad.
planning.
Yeah.
Yeah.
So I mean, she hasn't become a client, and I even told her, I said, I'm not gonna ever going to talk you out of it, and you absolutely have options, and there's a good argument for you to actually get coverage right now. But if you have other things that you're thinking about, like having children, buying a house, other things like that, then, this is part of that conversation, but I wouldn't say it's front burner.
Okay.
Now, the reason why I said 50s and 60s is because usually when people, if they've had kids, the kids are usually older and more independent. Maybe, hopefully, they're out of college or they're going to be out of college soon and maybe supporting themselves. They've paid down their house. So they're more financially secure, and health-wise, hopefully they haven't had some of the health issues that come as we just naturally get older.
Okay. Is there a maximum age? Like, is it like if you're this old, we don't even try applying, or is it really just based off of the health part of it?
There are options for people who are not in good health in most states, not all states. Like California, New York, there are fewer options. But every other state, there definitely are more options. I would never want to discourage somebody because, believe it or not, there can be a lot of creativity in insurance. But as far as, like, if someone contacted me and they were 85, I'd actually have to, like, do some homework. I'd have to do some research and be like, okay, what are my options here?
Like you say, two 78-year-olds recently reached out and they were able to, health-wise, qualify and all that.
So I just want to take a step back. What is long-term care insurance? So really what it is you're buying a pile of money that's tax-free and it's earmarked for care. So like that 30-year-old, if she bought a plan, like her pile of money would have more time to grow. So she could buy a smaller pile of money. The older you are, you have less time for it to grow before you're likely to need care. So it's going to be more expensive, and you're going to be buying, you'll have to figure out how big a pile you can afford. That will be growing with hopefully some amount of interest. I mean, and that's, where I get into the designing plans and things like that. But your question about like, okay, what if somebody feels like it's going to be a waste of money? What if couples are not aligned? So there are a lot of different options when it comes to long-term care insurance. There's traditional long-term care, and that there are certain components with that which has a generally use it or lose it feature unless you pay extra for a return of premium, which means at the end, if you haven't used care, they're going to return all your premium back. Or even if you have used care, depending on how the plan is designed. And those plans are generally the least expensive. And then you have hybrid plans, and those are a hybrid long-term care insurance with life insurance. And whenever I bring this up, typically somebody says, I already have life insurance, I don't want any more life insurance. And I tell them, nobody buys this for the life insurance, okay? If you have life insurance, you probably have it for a lot more than $150,000, and really the life insurance component is part of this long-term care. It's designed that way to address that person that says, what if I die before needing it? It's like, well, then your estate is going to get 150, whatever that amount is, but it's usually at least equal to the amount of money that you've put in, some more, depending on when you die. I mean, it could be more, it could be a little bit less, but it's to address that.
Okay.
And so when a couple comes in and they're not aligned, really what I remind them is that they're not buying it for themselves. They're looking into this for their loved ones, because it's the caregivers, it's the family members that are really going to struggle caring for somebody. And so I've had men I don't mean to pick on men. I've got men that are great clients, but it typically is men more than women that just say, I'm never going to need this, or they say crazy things like Smith and Wesson is my policy. I mean,
Oh
they
gosh.
say this to me. And I just say, look, I'm not going to argue with you. I just say that, if it isn't your policy because you have loved ones who love you and care about you, think about how it's going to impact them. And caregiver burnout is a real thing. Like, I have long-term care insurance, and so does my husband. And one day we were talking with his daughter, and I said something about long-term care and how, my husband would be well taken care of. And his daughter said, Carly, you're not going to take care of my dad?
Oh.
And I said, look, your dad weighs more than me. How strong do you think I'm going to be in 20 years to be helping him with these things? It's not even going to be safe for me to be doing that. I'm going to care for him by being his companion, not helping him in the toilet, not helping him with things that a lot of us don't want our loved ones helping us with those things. And that is what happens when people don't have a plan, or they don't have, a plan to actually have somebody help them, a trained professional help them with this.
When you talk about caregivers, my brain is like, how does long-term care insurance, how is that a benefit for the caregivers?
Most people do want to stay at home.
Yeah.
And they can stay at home when they have long-term care insurance. The plans do pay for care to be at home. But it is those technical things that aren't so dignified.
Yeah.
And I know I wouldn't want my husband helping me with those incredibly personal things. But the fact of the matter is that what I see is that people who don't have long-term care insurance, because when you have insurance, you're like, oh, I want to get that money. I've been paying for this. I want them to pay for it. They're so happy to put in a claim. But when people don't, they feel very uncomfortable actually spending money to pay for care, because they're thinking, oh, I can do this, or then there won't be enough money for X, or what about this? They're just thinking in a different way. And so when you have a plan, part of a long-term care insurance plan, what that means is that there is money that's there to pay for these things, tax-free.
Yeah, and I do know families run into that I know adult kids that feel like their parents are living so frugal and they're not getting the care that they need, or they're afraid to make that next move, and they're pulling back on making some big decisions. And the kids are concerned about the quality of care, just the quality of their life, and they're like, you have the money. And that's where I think we're at a different place than we were when our parents saw their parents go through things. We weren't living that long. There wasn't as much medical technology and knowledge and all the things that are allowing us to live 85, 90, 95. And so it's a different conversation now. And so I think a lot of people repeat what they've seen, but I feel like we're in the moment where, and I don't know if it's the Gen Xers or what, but I feel like we're in the moment of people going, wait, just because they did that doesn't mean we have to. There's a better way.
Yeah.
But it starts with talking and having these conversations. And so there's two things you said there that I wanted to clarify. It can be used for home modifications, and it's for care at home, because I think a lot of people think this is when you move into an assisted living community. This is when you leave your home and go get care somewhere else.
It can be if that's what the person wants, and sometimes that is a great thing. Plans that are sold now, and when I say now, plans that have been sold for the last at least 15 years, will pay for care at home or in the facility. It doesn't matter.
Okay.
Sometimes care at home ends up being more expensive. And so it's not like so obvious in the beginning, like what is actually best. But again, I'm all about options. And so when you just have a long-term care policy, purchased like at most mainstream policies will pay a benefit if it's care at home or care in a facility.
Okay. And what is the expectation of how it looks when you're going to, when you need it and you need to start receiving some money for care?
So all plans, regardless of whether they're traditional or hybrid, they start off with a monthly benefit. And I'm just going to choose like a basic number. Let's say, okay, it's a monthly benefit that starts at $5,000 a month that we've projected will last 4 years if the person is getting that amount of money from the get-go every day, solid, without any breaks till the end. It would last 4 years. Okay. 5,000. And let's say it's growing at 3% compound interest. That's a very popular inflation rider. And so sometimes this happens, somebody gets a plan and maybe like a couple of months later, they actually go on claim. Like maybe they had an accident. It wasn't even something about age. They were in a really bad car accident. And now they're coming home after being in traction and skilled nursing and all this stuff, but they need a lot of help. Mm-hmm. I mean, if they have a traditional plan, then traditional plans pay what's called reimbursement, which means bills are sent in, an invoice is sent in, and the insurance company reimburses you the money. And now a lot of home care facilities, they actually do the billing for you. They're wanting the business, so they're trying to make this easy. There are some hybrid plans that pay a cash benefit, which means, and when you pay as a cash benefit, what that's really gives you a lot more flexibility. The doctor's certified that you qualify with 2 of the activities of daily living or 1 cognitive that makes it unsafe for you to be at home. And what happens is with that cash benefit is that after that first time, the cash just starts coming in like automatic. Every, I don't know, first of the month, you're getting that money. And it's going to go like once a year. They're still certifying. You're getting a medical certification that, you're still, needing long-term care. It just keeps coming. And when you're paid in cash, you can actually use the money however you want. You can pay family, which you can't do with a reimbursement plan. So if you have kids or another relative or even a friend or a neighbor who's helping with certain things like laundry, making a bed is actually dangerous if you don't have your balance. So laundry, shopping, maybe taking you to the doctor's office, doing things like that, you can actually pay your family who might be taking time off from work. Now, not that anyone would do this, but I'm just trying to explain how much flexibility there is. With that cash, you could buy groceries, you could go on vacation, you could buy lottery tickets. There's no monitoring of what you do with that money, and it's tax-free. So, of course, assuming, if you qualify for benefits, you do need care, so you're probably using it to pay for your care, but you have a lot of flexibility.
I just read an article that said that 10% of all adults in U.S. are caregivers to somebody 65 plus. That's in the Pew research. And then AARP just reported that the average age of the caregiver in US is 51 years old. Again, Gen X, here we are. A lot of people are struggling between juggling their families. We're the sandwich generation, and so if they are acting as a caregiver, then they could be supplemented and paid as a caregiver through a plan.
I just
Yeah.
want to tell you that on my website, I have a plan of care document that anyone can download for free. I'm not tracking it, it's yours. And you're not going to be hassled in any way. And it's
Okay.
really just a two-page document that people can use to have this conversation. Who do I want involved in my care? Who don't I want involved in my care? What kind of assets? If I'm spending assets, what are the first things I want to liquidate? Where do I want my care? Like, what are the conditions that I would want to go to an assisted living? And then, are you familiar with assisted living facilities in your area? Just, really thinking about this on a granular level, because again, it's as much for the caregiver as it is for the person needing care.
Just looking at those questions, to openly, and again, I say in the beginning, like, these are the quiet voices in our head that we have to be giving voice to. We have to start saying some of these things. Tell us some more about like what your offerings are and how people can find you.
Well, as far as resources, so on my website, and I'm like on my YouTube channel, like I have a webinar entitled, Long-Term Care Start Here, that just kind of covers the basics. And anyone can watch that for free. I'm offering this webinar actually through the San Francisco Library for their Financial Education Month in April. So that's really exciting. Um,
When is that, Carly?
that is April 17th. Yes. Friday, April 17th. And anyone can just register for that. You don't have to be in San Francisco, just go to the San Francisco Library. And there's also on my website, there's a way for people to register for that at cjbins.com. But I mean, I love having these conversations. And as you can imagine, because I've kind of touched on some of this, like each conversation is different because each person has different concerns and objectives and constraints. Well, there's one other thing I just want to throw out there, because so many times people make decisions based on assumptions like, oh, long-term care, it's so expensive, or I heard it doesn't pay, or whatever it is. And I'm just going to say, it does pay. I see it paid all the time. It's paying. And the other thing is, don't just assume that you can't afford it, because plans can be crafted and designed. And in many of the states, not New York or California, in the other states, there are what are called short-term plans, where you can get a year of home care and a year of facility for a very low cost. And then you have something. And some of these plans also pay a cash benefit. And so because it's for a shorter period of time, it's maxed out at, 1 year for home and 1 year for facility, it's less expensive because the insurance company isn't going to be on the hook for 8 years.
Yeah. Well, and to your point of if people are saying it's too expensive, but paying this out of pocket is the alternative,
Yes.
right?
Yes.
And so I think that that's the reality we have to have is the cost of this care. It's like have these conversations about what does it cost to go visit your local communities. You had said that, like, is it a CCRC where you pay a lump sum? Maybe that's not for you, but look around and see what options there are, but understand what it costs too, because not having a plan is a plan, but it's a plan to fail. And it's a plan for a family to just have absolute burden and chaos. And so we want to help people avoid that, but you have to reach out, be vulnerable, answer questions, talk about it, get information. But just, and have this conversation with your family. That's why it's so personal. The big if question is, if you need long-term care, what is your plan? And
Yeah.
and if you have an answer, great. But if you don't have an answer, people need to go to your website there and check out the Plan for Care doc and start that conversation. Everything you mentioned prior will be in the show notes for listeners. So I'll have links there available for them to get to your page and to get to that document easily. So, well, Carly, as we wrap up, is there anything else that you want to make sure we highlight during this, introduction kind of to long-term care insurance?
I guess the one thing I'd like to leave people with is please look into this, for yourself. Don't just make an assumption, whatever you've heard people say or about cost, just like really think about it, because it's really, it's part of your legacy and, lasting gift for loved ones. So, that's what I'd like to leave people with.
Yeah. And that gift, a lot of times it doesn't have to be in a monetary form. It's in the gift of people understanding, your kids understanding what your wishes are. And, like again, to that example I shared, a lot of adult kids want to see their parents live a good life and not be so frugal that it's interrupting their quality of life for the rest of their life. The way things are going, we're seeing different things than we have in the past. And it's just bringing it to conversation. Well, I wanted to invite you to, I call it the ready or not lightning round. Are you willing to answer a couple of questions? No overthinking. It's just your first instinct.
Sure.
The first one is, if you were to be able to choose on a home between a front porch or a back deck, which one would you choose?
Back deck.
Yes. Okay. What phrase or piece of industry jargon do people outside of your field, they wouldn't understand it if they heard it? What's that word or phrase, and then what does it mean?
So people outside of my field would not know ADLs, which is activities of daily living. And then they might not even know what that is, except we just covered that in the podcast. So the activities of daily living are ADLs.
Yeah. And I have to say, the way that you summarized it and gave the example of it's the first hour of your day, I think that's a brilliant way. I've never heard anybody say that. And I've been to many Medicare things. So I think that's a great way to summarize it, that you're pretty much doing all of them within that first hour of being awake. I think that's brilliant. That's a takeaway right there, listeners. And then the third thing, one thing at age 55. If every listener did just one thing at age 55 to make their life easier when they're 75, what would it be?
Complete the plan of care document and share it with your loved ones. That one thing, and it doesn't cost any money.
It just gets you thinking and starting to make some decisions. Know your options. Then you're in control. So I love how these small questions like come together and uncover bigger things. I really appreciate your time today. And, if people out there listening, if this resonates with you, don't wait for the big moment. Don't wait for some urgent crisis. Start with one small actionable item, one small question, one small intentional conversation. And hopefully we gave you something here today to do that. Because I want to make sure families understand that the ones that have clarity and confidence aren't the ones that have the answers, but they're the ones that are willing to begin and start these conversations. So, Carly, thank you so much for sharing this today. Your perspective on long-term care and your education is just, it's evident how much you want to help people understand and educate before making decisions. So, such a meaningful conversation, and I thank you for your time today.
Lisa, thank you so much. I really appreciate your invitation to have this conversation and your great questions.
Oh, thank you. Thank you. Thanks for joining me on Not Ready Yet, Curating Conversations for the Aging Journey. If something in this episode gave you clarity or the courage to start an important conversation, or offered a new way to look at things, I hope you'll share it with someone who might need the same encouragement. Remember, navigating aging isn't something we have to do alone or in crisis. With love, logic, and the right tools, we can face what's next with confidence and connection. Be sure to follow or subscribe so you never miss an episode. And if you're feeling generous, leave a review. It helps others find the show. And just a quick note, the information shared on this podcast is for educational and informational purposes only. It is not intended as a substitute for medical, psychiatric, legal, or other professional advice. Always consult a qualified professional for guidance tailored to your unique situation. This is Lisa Harper, and I'll see you in the next episode. Bye for now.